if you can sit to the left of the inducement curve of those big sustaining capital projects in the Andes, you're going to underwrite a healthy excess return.
Thanks, ladies and gentlemen, for joining us. As Bill said, my name's Dominic Piper. I'm the editor of Australia's Paydirt and Gold Mining Journal and your session host. Well, thank you very much, everyone, for joining us. We've only got an hour and there's 6 panelists, so I'm going to eschew the usual biographies to just dive straight into it. I'll start on my far left with Daniel Rodriguez, who's Vice President Sales APAC for CRU Research Group. Thank you, Daniel, for joining us. Next to him, we have, who's there? It's Martin Holland, Executive Chairman of Cobre Limited. Next to Martin is David O'Neill, Managing Director of American West Metals even. Just shifted you there, Dave. Then to my right, although I assume not politically, is Darren Cooke, CEO of FireFly. Next to him is Mike Christie, Director Exploration for First Quantum Minerals. And finally, all the way to the right there is Sandfire Managing Director Brendan Harris. How is everybody, okay?
Fantastic.
Yeah? Well, with 6 people, that's about all of the answers I'm going to get out, and we're just about out of time. The subject is obviously copper. Each of you have got an interest of some sort in copper, quite large, it may be said. Looking overnight, the LME copper price, the cash price hit 9,970 a ton. The 3-month price hit over 10,000. COMEX even higher. It got to a high last night of $5.37. I just seen Sharif Andreas is here from BDO. His Explorers report said that there was $221 million raised for copper or copper gold projects in the December quarter, and we've seen even more since then. There's a real momentum, and I'd like to investigate why that momentum may be such. I mean, we had hoped to have a guest of honor, probably the man who's done more for copper prices in 2025 than anybody else. In fact, he loves copper so much his skin tone is copper. But I overread a text this morning that he was sending to J.D. Vance, and apparently Donald Trump isn't available to come and talk to us today. So instead, what I thought I might do is start with the ASX's largest independent copper producer, Sandfire Resources, and their Managing Director, Brendan Harris. Brendan, I mean, I just read the spot prices there, but it just feels, it might not be the highest it's been in 5 years, but it feels like there's real momentum in the copper price at the moment, more so than any time since COVID, really. What are you seeing in the market? What do you put that drive down to?
Look, thank you, and to the fellow panelists as well. It's a pleasure to be here, and good to see so many people in a room to talk about copper. And obviously a lot of energy. I can hear the energy in the room. A number of us just came back from the BMO conference in Miami, and I've got to say it's probably the flattest. If you're not a gold producer, it's about as flat as I've experienced a conference in a lot of time. Still a lot of interest in copper, but I think some of the geopolitical uncertainty, that you were almost referring to there, is playing through. But when we look at copper, it's been on trend, if you like, for investors now for some time. But as you know, markets can be very impatient. It takes time for the fundamentals to win out. And I think what we're seeing is the fundamentals are slowly winning out. Really simply put, it's around a 30 million tonne market. Projections, plus or minus, would have it growing at around 2% per annum out to 2050, with transportation and power infrastructure taking over from construction and the consumer to some extent. That provides, obviously, a very, very good backdrop. In simple terms, it means that you're going to need something like 10 million tonnes of new copper supply to 2035, or around 1 million tonnes per annum, which, particularly for the BHP, Rio Tinto folk in the room, will know that is equivalent to adding Escondida every year. At the same time, we also know that grades are declining in the industry. We know that 50% or so of the mines are more than 20 years old. And so it is likely, as we've seen, I think, over the last decade, that the supply side will more likely disappoint than exceed, let alone meet expectations. And so when you put all that together, It is fair to say that my personal view is that, as we've seen with many commodities over the last 20 years that have gone into fly-up or scarcity pricing, I still think there is asymmetric risk to the upside just because we're likely to see compounding deficits, and I think the market's going to need to move to truly incentivise a change in risk appetite from investors, which will ultimately be needed before you'll see that next leg of supply.
Thanks, Brendan. I'll go all the way to the other end. Daniel, CIU's just recently published some research on the copper market. Is that a similar situation that you're seeing? Steady demand, but really a supply side issue?
Yeah, absolutely. I think, so I agree with everything that, Brendan said. And also thank you, obviously, for the opportunity to have a research house in the room, maybe a little bit independent in regards to the market. But certainly, look, I think when we're looking at the copper market, to Brendan's point, I think the real issue here is it's the supply side is, it is depleted. A huge amount of capital expenditures required to bring on, supply. And we're at a tipping point where we've got, a fairly high copper price. But is the market sitting there saying, well, we need to just push that a little bit more to incentivise these projects to come online? And different to, a lot of the other critical minerals, strategic minerals, battery minerals, I think when you're looking at copper and you look at green energy transition through to the, time frame, say 2035, 2040, it is a big demand driver. When you look at a number of different end markets and industries. So you can look at, the optical fibre industry, you look at wire and cable, you look at, the electric vehicle industry. Copper is a key ingredient to all of that moving forward. So I think it is separate to a lot of the other things that we sort of talk about if we're looking at, critical and other battery metals, lithium and nickel. They're obviously going through some downsides at the moment because there's too much supply. I think with copper, we are at that inflection point, and it is the supply side that's, continuing to sort of raise that price upward.
Yeah.
Dave, you've got an asset in North America, in Canada. We hear it's usually in commodity markets in the junior sector. It's the North American market that drives that interest and drives the fundamentals. Reflecting on your last couple of months travelling over there, what's been the feedback that you're hearing? Are the forces gathering for a big push in the copper space?
Yeah, absolutely. But it's not just being over there and hearing from the local side of things. There's it's sort of coming from everywhere. Europe and other jurisdictions, particularly Asia, as these sort of countries start to localise and centralise, you'll see that there's these other jurisdictions starting to look for copper all over the place. So not so much. And look, we're at the more high risk end of the development spectrum, obviously, but we are starting to see a lot of people now come down that risk curve looking to supply future copper demand. So that's positive. But a couple of things I'll add to the other things is that with copper, and look, everyone's crystal ball is probably not as efficient as it was a few years ago, but a couple of key things is that thematics don't seem to be affecting things. So, come back 3 years ago, EVs would have been, everyone goes, EVs, all the elements required. Copper's obviously a very big part of that. Obviously that plateaus off with the recent things going on, but then you've got two other things replacing that, which is war. You need, copper for munitions and military vehicles, and also AI has taken its place. So, which is a massive demand on all critical metals, and particularly copper. So with one thing disappears, you've got two falling in its place. And again, 3 years ago, you'd never predicted that war and AI would have been the big consumers in the future. So, yeah.
Thanks, Dave. We're supposed to be uplifted here. You're talking about war and
AI
stealing my job.
And AI.
No, thanks, Dave. I think it's a great point. Darren, I mean, I'd assume that you've had similar experience in the last couple of months.
Yeah.
But looking at those, there's a big difference in COMEX at the moment to the LME price. And, there's a lot of talk about the copper tariffs coming in. What can we read into that? What's your feeling on that?
Yeah, look, my feeling on that is that it's quite positive for the longer term outlook for copper. I mean, you look at the arbitrage now between the LME and the COMEX, and you're seeing trade between those two markets now taking advantage of that arbitrage. So I think it's quite positive. The other comment I'd make from the travels and spend a lot of time in Canada, and I'm heading back over there again tonight, it's really galvanised Canada and woken them up to really take a position on their mineral resources, that we've got to build it now. We can't rely on other economies, and we're going to fast track permitting. We're going to fast track a lot of different things, and we want to build mines and be a rich country that's not dependent on the United States anymore. So we're seeing some very positive flow-throughs to the mining industry with the geopolitical landscape. And what we're also seeing is a lot of movement into North America, with copper being shipped into North America in anticipation of potential tariffs on copper. So trying to get it in there early so they can not have to pay the tariffs down the track if they do occur.
Yeah. Thanks, Darren. Mike, obviously First Quantum has been a company, it's always been a copper company at heart, but it's had nickel assets at times as well. Those are on the back burner, if you like, at the moment. What's the feeling inside the company at the moment? Are the current thematics driving a new wave of investment by the company in copper?
Sure. I think it's very interesting to explore the supply-demand fundamentals of copper, and I wouldn't disagree that the demand is there, and it's growing as it has grown for the last 50 years at 2 to 3% a year, every year, irrelevant of the new dynamics of decarbonisation and so forth. So that will continue as we bring hopefully the billions of people out of poverty in China, now India, and ultimately Africa. And they all want fridges and cars, and they all want to be connected. And copper's the only way of doing that in our current civilization. So it is part of our global growth. But there is no lack of copper in the world, and the supply-demand is driven by the price curve. And I think really where people probably need to understand is that there are literally hundreds, if not thousands, of undeveloped copper deposits in the world. We look at them all the time. So my table of guys over there has scoured every copper deposit on the planet. We know the economics of it. And we spend an awful lot of time looking at those, because that's really First Quantum's lifeblood, is building those new projects. And sometimes we go to places where others fear to tread. So if you want a 0.3% copper deposit, I could literally hand you hundreds of them. The real choke point, in my view, is what it costs to develop them. And the capital cost of doing that, I think we've got a lot of gun-shy companies around the world that sort of blew their brains out back in the last boom about 8 to 10 years ago. And at the moment, they're concentrating all their efforts on expanding existing mines rather than necessarily developing new ones because of the incredible capital cost. And we're now talking billions and billions of dollars. And so I think the real incentive to develop new copper mines is going to be considerably higher than where the copper price is today. I mean, we're all pretty happy with the copper price today. It's great. If you've got an existing mine, you should be making quids. But the incentive price has to be probably in the order of $8 a pound, $9 a pound, something like that, to really get people to start shifting those very large capitally intensive projects, I think.
Thanks, Mike. Martin, you sort of sit on the opposite side of the equation to Mike. He's scouring the world,
Sure.
looking for new assets. You have been holding an asset up, and BHP have come and identified you with your Ngami project in Botswana. In your discussions internally and now with your new JV partner, is the project being primed to deliver into that sort of market that we're talking about in 2035 and beyond, and into an incentive price that Mike talks about?
Yeah, I think the clear message is, especially for junior explorers, it's obviously been quite challenging to get the capital to actually do the real work that's required to find tier 1 deposits. So at Cobre is a company that's focused on copper exploration in Botswana. And we were part of the 2024 BHP Explore program, and recently got funding from BHP about 2 weeks ago to actually start doing that deep exploration that's required to, test new methods of geophysics to actually find like new discoveries. I think in simple terms, all the low-hanging fruit has pretty much been taken. So finding new discoveries is getting harder and harder and harder. And on top of that, you've got sort of like geopolitical risks, your jurisdiction risks. You have to go to more challenging places to find deposits now. So I think a junior company really has to partner with a major to have that capital and that combined expertise to actually do the work that most junior companies can't do. So part of the transaction that we've got with BHP is that we're actually testing and pioneered like a seismic work that we've done in Botswana to actually do some deep holes. You're talking like 1,300 metre deep holes into these targets to try to find the next tier 1 deposit. And like tier 1 to like BHP is like they're talking like a 5 million tonne of contained copper is what they're looking for. So I think more of this sort of partnership with juniors and majors has to happen to meet that at that supply deficit that's going to be, which Brendan mentioned earlier, in regards to need like a number of Escondidas to actually meet that over the foreseeable future. So I think that partnership is great, and it was a great initiative that BHP's done to assist juniors to work ahead to find those next tier 1 deposits.
Thanks. Mike, just back to you. I mean, you said many companies blew their brains out in the last boom, and there really has been very few major copper discoveries over the last 2 decades, really. I mean, not to make you the solution, bring up the solution for all of it, but why? Why haven't we seen more copper discoveries in the last 2 decades?
Yeah, look, there are still, some significant copper discoveries around the world. Many of them are reinventions of things that were discovered 20, 30 years ago and are only now becoming economic. And I think we'll see a continuation of that trend. But what we really need is more Kamoas, right? I mean, Kamoa is the shining star of discoveries that we're looking for. And I think it's a different style of deposit. It's a different exploration model. And I take my hat off to Dave and others that are going into the sediment-hosted basins looking for that style of deposit. Because porphyries, typically the economics are such that they basically have to outcrop unless you've got one of the very few ones that lends itself to deep underground block caves. And we've seen very, very few of those really come to fruition without some sort of early cash flow from an open pit or something on top of it. So if you're looking for a higher grade copper deposit, then really you're looking for sediment-hosted IOCG or VMSs. And VMS is generally quite small, so they're attractive and they can make a lot of money for a smaller company. IOCGs can be good, but you can count on the fingers of one hand the number of really substantial IOCGs around the world. So then you're really left with sediment-hosted copper, which supplies about 30% of the world's copper. And they're a really challenging exploration model, I can tell you, because we've tried to take our experience out of Zambia into other countries, particularly like Kazakhstan and Australia, and use our exploration experience to look for them in different basins. And they have minimal geophysical signature. They've got, if they're in a deep basin, they've got minimal geochemical signature. So you're really starting to talk about conceptual modelling and getting much more into a petroleum space of understanding fluids and evolution of the basin. And that certainly is a very tricky space for a junior company to get involved without the help of a major or some other funding mechanism that can drill the deep holes and the large quantity of geophysics needed to build those sort of exploration models.
Yeah.
Brendan, I can see you nodding your head there because I know Sandfire, not only are you doing a lot of work in sediment-hosted belts, but you're also, we've talked previously about the exploration team applying some of those oil and gas sort of concepts to your exploration strategy. Can you explain that to us, please?
Yeah, look, and maybe just as I do, just stepping back, one of the things I think we've sort of perhaps overlooked, if you go to Escondida and you go back to 2005, roughly 20 years ago, they were processing around 80 million tonnes of sulphide ore at around 1.5% copper. Last year, I think, and I'm happy to be corrected, they were doing around 400 million tonnes at 0.9. and they're moving towards a reserve and resource grade somewhere between 0.5 and 0.6. The thing about the Andean porphyries that we often forget is they have very few byproducts. And that's really important. So as they're getting deeper, they don't have access to the local water aquifers anymore, so they're having to pump the water up the hill. Power is a challenge. Strip ratios are rising. All of those things means that you're also seeing a steepening of the cost curve. And it's a cost curve that is fundamentally different to iron ore. In iron ore, the big players with all the resource sit right down the bottom. The Andean porphyries are moving up. And the reason I bring that out, it means, therefore, if you can find deposits in geographies where there's some uniqueness about them, perhaps it's grade, perhaps it's mineralogy, perhaps it's the operating environment, the landscape, that gives you a capital intensity advantage or a cost advantage. If you can sit to the left of the inducement curve of those big sustaining capital projects in the Andes, you're going to underwrite a healthy excess return. And so, I look at the Iberian Pyrite Belt, the VMS system that you mentioned earlier, where rightly the industry left and moved to the Andes in South America because of this enormous endowment that was discovered there. But I sense that people are going to need to start moving back to places like the Iberian Pyrite Belt, where you've got very attractive, high-grade VMS systems. Magdalena, which is our probably jewel in the crown in Matsa, was discovered only in 2013. It came into production within a few years of the first drill hole. Very, very attractive regime. And then if you go to Botswana, as you've alluded to, it's required a whole new way of thinking. Obviously, having developed 2 open-cut mines, the geologists in the room would know there's nothing better than opening up an ore body, because you can actually see the stratigraphy, the structure in the pit, in the footwall. And what we learned, very much to the earlier point, is there are thrust systems, no doubt, in the basin. It's a large thrust belt. But actually there's these tight asymmetric and isoclinal folds which are creating fluid traps, which is where the mineralogy is forming, which led us to very quickly start to learn and conclude it's more akin to petroleum geology, it's more akin to petroleum geophysics. So like Cobre, we've been using seismic, we've been using both active and passive, and that, I guess, is combined with the knowledge we're building around the ore bodies, but also all of the other geophysical tools we have as well. So it is, look, if you're a geoscientist, there is no better place to try and find ore bodies than a sedimentary copper basin.
Thanks, Brendan. Daniel, back to you on that research that you guys have done. Are you tracking the rate of discovery across the copper world and the rate of development as well? And as Brendan, one of Brendan's first points, the very start was that there has been an under-delivery of promised production over the last 15 years.
Yeah, we certainly do. And I'll probably reiterate a couple of points on that. I think that, back to a comment made earlier, certainly from Martin in regards to when you look at like junior mining as an example, as a whole, it's critically important in the copper industry because, the majors need those juniors as a starting point for some of the key exploration that's occurring. And so if you look at even transactions that occurred last year, in the second half of last year, there was 77% of transactions were by majors into juniors, either in existing production or on the exploration side. So they really have to work hand in hand, and we see that with the majors into the juniors. And back to the question on the discoveries, absolutely. We do look at future supply and obviously the cost of that supply, and then jurisdictions. So if you look at, say, South America as an example, we look at Chile and Peru, and they can account for potentially 40% increase of supply. Argentina is a new frontier. I think we know that with the change of government and the I guess where they want to take that industry, as an example. And again, with the potential of good quality assets there. But to the other points made, it does come with risk. It comes with risk of, sovereign risk, obviously. I think in Peru recently there's been some both political and instability risk. We've seen that certainly in Panama with Panama Cobre. So some of these jurisdictions are a little bit challenging in that respect, both from environmental, both from sovereign. But as far as potential supply opportunities, yeah, South America is very much an opportunistic location.
Darren, obviously FireFly didn't choose South America, it chose North America and it didn't choose a porphyry system. What was the rationale behind that acquisition and what did you see as the opportunity for a junior like FireFly?
Yeah, well, to Brendan's points that he made about VMS-style mineralisation, they do have a lot of advantages. They may not have the massive scale of a porphyry, but when you look at the grades that you can produce out of those things, the key element is the time that it takes to get them into production, because you look at how long it takes a porphyry to get up and going. You can talk decades in some jurisdictions, and the cost, like, billions and billions of dollars to set up a porphyry cave, for example, before you even start getting any return on your investment. So, to me, one of the reasons we were looking at the high-grade VMSs, and the grade of our resource is 4.5 times your average porphyry grade, and we contain a lot of copper in it. The reason we did that was because we can get it into production very quickly at low capital in a very stable jurisdiction in Newfoundland.
Does that sort of upend then that traditional, and Daniel's just been talking about it, that traditional idea of copper projects and porphyries in particular being having a very long development time frame and just being unsuitable for a junior investment?
Yeah, look, I think that plays into it, and you look at a lot of the juniors that have dabbled in the porphyry space, and to your point earlier, there's been very few that have actually been successful and actually taken it into production themselves. So, to me, you're right, with the porphyries, they need partners, but with the deposits like we've got, we don't necessarily need a partner to be able to make it happen, and we can bring it into production very quickly.
Dave, I suppose it's similar for you guys in Nunavut. You've got a more discrete ore body that you're going to be able to develop in hopefully in quick fashion. Was that a deliberate strategy to find something that you could get your teeth into?
No, I think so. Copper's got something for everybody, from the junior end to the major end. So, like Cookie was saying, there's the VMS style things which are limited in geometrical dimensions, but can be quite rich ore bodies, and quite quickly you can define them and get money to do that as a junior / mid-tier to the other end of the spectrum, which we're talking about. But no, look, for us, Nunavut was an opportunity, and it plays straight into what Mike was talking about, is what's going to give you everything as a junior and a major, and that's obviously sediment-hosted copper, and I'll come back to that, is it's got the grade that even if you do find a smaller one, you can still exploit it. So you're in that 1% to 3% range, particularly if it's open pit. But then you have the scale potential as well. So, you could quickly make a discovery that turns you into a major as a junior. The beauty of us, look, the challenge for sediment-hosted copper, like Mike said, is where Lucky Storm sticks out of the ground. So it's been known about. It's quite easily, it's the tip of the iceberg. But look, we've got 110 k's of belt, which has got copper all the way along it. It's the buried ones and the ones undercover that are more difficult to find, and hence we're leaning on these other methods, etc. But no, look, we purely went up there because we had 110 metres at 2.5% copper, and we step 100 metres that way and 100 metres that way, and we can quickly add tonnes. To Cookie's point, is that's something that a junior can do. It's turned out to be something much larger than that, but our interest is what can we manage? What's a relatively people won't understand this, but a fairly simple jurisdiction to operate, and that was really the drivers for us.
Martin, was it a similar driver in Botswana? You've been battling away for a number of years there now, yes, before BHP came in. Yeah. Was it a driver to be able to find something that you could progress?
Yeah, definitely. I think one of the things that attracted me to Botswana the most, I actually spent a lot of time there going to the Upper Bengo Delta and different safaris around the world, and absolutely love it from a tourist jurisdiction perspective. But on top of that, the US Geological Survey rated Botswana and the Kalahari Copper Belt as the #1 belt in the world to find new, undiscovered sedimentary copper deposits. So to me, that was a pretty good place to start. On that note, you sort of, when you continue with your exploration, you sort of don't know what style of deposit that you are going to get. And when we started doing our exploration, like literally drilling blind holes with like 70 metres of sand cover, doing a little bit of geophysics and just getting an understand of how to reach the contact to start off with. So we sort of mastered the geology there, but now we've moved into like a more of an innovative way of how to mine copper. And we believe we're on the cusp of probably the holy grail of copper mining, which is an in situ copper recovery method. It's very rare in the copper space. It's very common in uranium mining. So about 60% of all uranium mines is done by an ICR method. But we've actually gone down this path now that we've identified a huge tonnage of copper in excess of sort of 150 million tonnes of it. But we're now investigating this in situ copper recovery method, which has only really been done a couple of times before. There's a company in Arizona called Florence Copper that's got about $1 billion market cap at the moment. At the grade you need is not a lot. So when you're talking about the 0.3 grade, that actually becomes quite economic if you've got the right sort of method in regards to ICR. So Florence Copper's only got 0.25% copper, and we're sitting around about 0.5% copper. But there's a whole range of sort of geological understandings that you have to have in your favour to do this. So one is the whole deposit has to be dominated in chalcocite, which is very rare in itself. So you have chalcocite, bornite, chalcopyrite. So having dominated chalcocite's rare. The deposit has to sit below the water table, which is rare. It's got to be like naturally fractured, and the porosity and permeability's got to be there as well. So there's all these sort of things that pretty much wipe out 98% of all copper projects from using this. But if it works, it's a very low environmental footprint. It's pretty much a well field, so you're putting like a well down and pumping it up. It's modular, and you're pretty much rehabilitating whilst you're mining. And it'll sit on the bottom of the global cost curve at around 85 cents a pound OPEX, and probably half the cost of an open pit from a CapEx perspective. So these are sort of innovative ways that you have to sort of act now when you're sort of given a project that you're not quite sure what you had to start off with, and then adapting to that. But then more traditionally, we're doing more looking for the T1 discoveries, adjacent to that project with BHP.
Thanks, Martin. Mike Martin mentioned innovative ways. He's talking there processing, but what about in exploration? How are your team taking on innovative thinking to find those? You said you've looked at every project and province in the world. How are you taking new innovative thinking to pulling up the next wave of prospects?
Yeah, interesting question, Dominic. Just on the processing first, it's a really good point about the in situ leach, and I think the other thing that has the potential to change our industry is sulfide leach, so that we don't have to grind these things to some minuscule particle size to extract the sulfides. And certainly there are a number of companies working on that right now. And if that comes to bear, then actually it will change the cost curve quite significantly in the way that SXEW did back in the 90s for the copper industry. So that is one of the potential solutions, but it will have some fallout in the industry. On the exploration innovation, really, I think going back to Darren's point, we've got to start thinking differently. Porphyry exploration models are well documented and well understood in the industry. They produce 70% of our global copper today. But as I think several of the speakers have said, the number of them being discovered today as new at-surface mineable targets is diminishing rapidly, partly because of very effective exploration. They're good geophysical targets, good geochemical targets, and they have a very high aspect ratio, so they're a kilometre deep, and they're quite good to explore. And so the vast majority of those were discovered in the last 50 years, and very few are going to be discovered unless you're diving undercover in the next few decades. And if you go under too much cover, they become uneconomic because they simply don't have the grade to carry it to depth. So then you start moving into the space in sedimentary basins where you've really got to understand very different dynamics of what's going on and start to build 3D models of basin flow and fluid flow within those basins, as Darren discussed with the petroleum type mindset. The problem in our industry is we don't have the luxury of 3D seismic, which of course is everybody's dream for a sediment-hosted copper deposit. You can do it in a small area, but we don't have the budgets that the petroleum companies have, where they spend literally hundreds of millions of dollars collecting those data sets. So, I mean, in our group, we use a lot of MT, magnetotellurics, which we call poor man's seismic, which as long as you can understand your stratigraphy reasonably well, and you have some sort of pilot holes that give you the conductivity of that basin, then you can start piecing together a 3D model. And it's a bit of a blunt tool, but it's better than nothing. So certainly extending those sort of technologies and beginning to build 3D structural models around basin flow and fluid flow, and doing far more in the way of actually understanding of your rock types and your porosity and permeability in your basin is something that I don't think companies have done a lot of in the past. So you're really just transporting technologies out of the petroleum industry into exploration. We've done an awful lot in the remote sensing space in recent years, which is very helpful in porphyry exploration, but all we keep finding is porphyries that have been known about for 30 or 40 years, because they're the ones that are outcropping and they have the signature. As you get down to smaller and smaller pixel spaces, then you start finding fragments of porphyry alteration systems in an undercover area that's just got a small drainage with a couple of pixels that shows you an alteration halo, and if you're lucky, you just might grab one of those. But otherwise, you're really looking under, in South American terms, you're looking under the Pampa. I notice the OzQuest guys are here today, and they've had a great discovery there. And we've spent a lot of time in that space looking undercover for shallow porphyries. But again, if you go much beyond 50 to 100 metres, you're really getting out of economic space for most porphyries. So, as we advance undercover exploration in that sense, I think we're going beyond the realms of geochemistry in most cases, and we're really getting more and more involved in deep sea geophysics. So that's where we put a lot of focus.
Darren, there's a lot of agonising in the gold sector where you have a lot of experience in exploration and discovery. Are you seeing similarities in the copper space and approaches, particularly of juniors and mid-tier companies?
Yeah, 100%. And look, one of the big opportunities that I see is that a lot of the work in some of these big historical belts, was done in the 80s and 90s in terms of the technology that was used, particularly the geophysics and everything. And think back to what your mobile phones looked like in 1995, right? They were about the size of bricks, right? And, a lot of the geophysics in those areas was done in that sort of environment with that sort of technology, and geophysics has moved a long, long way in the last 25 years, and we're finding new anomalies over old ground that were totally missed, so both in the copper and the gold space. So I think there's a lot of potential to do that. The other opportunity for exploration is not to get too hung up on model-driven exploration, because ore bodies are very much like the people in this room. They're similar, but everyone's different. And each ore body has its own characteristics, and sometimes geologists can get a little bit focused on, it hasn't got this ingredient or this ingredient, but sometimes ore bodies occur in different places. So I think, where a lot of the major gold discoveries have been made recently, you look at St Ives with some of the stuff there. Historically, you don't find gold in sediments. Well, look at some of the stuff that Goldfields has done around St Ives. So I think some of that, the paradigm shift and the model-driven exploration, it's something that we've really got to challenge.
Thanks, Darren. Brendan, we've talked a lot there about geological factors influencing what's happening, and underground factors influencing where companies are going, where companies are exploring. But it strikes me, and you mentioned it earlier, there's a whole host of non-economic factors as well, above ground, if you like, risk factors that are influencing where copper is explored for and where it's where it's developed. How does Sandfire approach those non-economic factors in deciding where it's looking, whether that's Botswana or the Iberian Pyrite Belt or Montana for that matter?
Yeah, look, I appreciate that, and perhaps just reflecting on the earlier conversation, the sort of phrase drill, baby, drill comes to mind as well. So there's a lot of discussion about ultimately this foundational work that we do, but we've actually got to drill holes, and I think when we look at the number of holes drilled searching for copper in the last couple of years, it's down something like 50%. Not a great metric, but there aren't great metrics to find. Budgets have been relatively steady, so again, we're just not seeing the level of activity. So that's something that we're very focused on at the moment is drilling in and around particularly what we call our strategic hubs, because ultimately the most value accretive thing we can do is extend the life of our current mines. Look, I think the question you posed is an excellent one, and I'll answer it in a way that may not be as popular in this room as some might like it to be. But I think if I go back to the sort of early 2000s, late 90s, if you'd asked people what a tier one geography was, I think they very quickly, almost reflex action, would have said Australia, North America, with the emergence of South America. They would have talked about stable democracy, stable fiscal terms, access to ready-made talent and labour at a reasonable cost. If you look at that today, I don't think the same holds true. I think there's clearly a lot of talent in those traditional mining locations. Perth is a wonderful example of that. Primarily, it's why we're here. When you think we operate in Botswana and Spain, it's why we're here. But, I've been asked a lot as I've gone around the world in the last 2 years, how are we coping with industry-wide cost inflation? And I've intentionally responded by quizzically asking what people mean. And I do that intentionally because I get some very strange looks back across the table. And then I ask them, well, what's driving that? And they very quickly come to the conclusion it's labour inflation. And if you look at the turnover rates we've seen in Australia, the FireFly operations, you can all tell me, but 20 to 30% is not uncommon. If you look at fiscal terms in a number of Australian states and elsewhere in those traditional locations, they haven't been as stable. And I compare and contrast that with a place like Botswana or southern Spain. The labour markets are fundamentally different. There's 20% unemployment in both places. We've actually had lower costs across the last 18 months than we anticipated. We've been downgrading our expectations for costs. And so I think that ties into some of the questions around where do you go and look for the rocks. I think ultimately there is that truism, you've got to go where they are. But equally, I think there's this increasing realisation that the traditional mining jurisdictions don't have the same competitive advantage, at least in my view, as what they did in the past. And it goes back to this view that I think not only will mining companies, the majors, but investors as well, are going to need to reconsider how they think about risk appetite.
Thanks, Brendan. Daniel, it goes back to a point you were making earlier about the challenges and not only political climate, but also social climate as well. University of Queensland's Sustainable Minerals Institute published a paper in 2019 saying of the 200 largest undeveloped copper projects in the world, more than 75% of them had non-economic issues holding back their development. Are you seeing that in your work regarding why these projects aren't getting delivered?
Yeah, look, absolutely. I'll touch on a couple of points because I think you're absolutely right. I mean, you've got to look at it at a global perspective in regards to, got to go where the rocks are. But also if you look at the economics, obviously, which is what we do from a project perspective, but involved in that is also environmental approvals and permitting and all of these other aspects that are very challenging when you're looking at specific jurisdictions. So when you look at places, and everybody obviously wants to become competitive in that perspective. So when you do look at these emerging markets as an example, and we've seen this in other industries like the nickel industry in Indonesia, but if you do look at, say, Peru and Chile as an example, they've, from a permitting perspective, they've put a lot of emphasis on improving that process to ensure that, yes, there is development in those countries from a environmental, from a permitting and so on. Not to say that they're fast-tracking that or they're, not ticking all the boxes, but it's a much more seamless process than in some of these traditional markets like Australia, as an example. It's very difficult, as everybody knows in this room, in certain parts of Australia on the permitting side, which just delays the project, obviously, and then there's also this overlay of cost. And then from an input perspective, obviously you've got this, a big input from a labour perspective, but also the inputs around reagents. In the copper industry, it's sulphur and sulphuric acid. These prices really either kill the project or not. So I think when you're looking globally and you're looking at those comparisons and looking at, the way in which governments locally are going to support projects, then people are tending to go to those locations because they're seeing this, ease of, I'll get my project approved, I'll get it online faster. My permitting will take 4 years as opposed to 8 years, which makes a big difference.
Thanks, Daniel. Martin, it strikes me from a couple of the comments here that there's really a change in attitude as well in the marketplace around. A decade ago we would have struggled to get this many ASX copper listed companies on a panel because there was so few of them around. Yet we're seeing greater investment. Mike just mentioned Graham Drew and Ozquest have had a great start to the year. All you guys have had a great start. You've brought BHP in. Is there a paradigm shift in investor attitudes and interest in copper juniors around the ASX?
I think to answer that question, I think everyone's been waiting for it. So I think everyone's saying it's coming. And I think it's getting to that point where it feels like it's almost there. So the sentiment is starting to unfold in front of us. These things generally take a long time, but when they happen pretty quickly. So you see that in all different commodities. So definitely interest is starting to pick up from an equity point of view and for funding point of view. There's also a massive hunt which is currently happening at the moment from a lot of the majors that I've talked to in regards to finding and acquiring additional copper projects. So I think moving forward you will see more interest from high net worth individuals and also sophisticated investors and funds that will start piling into the copper sector and moving forward, especially with the current price of copper. So yeah, I think we're in for a positive period in this space.
Thanks, Martin. David, do you agree with that point? I mean, we're seeing a lot of corporate interest, in particular, obviously, BHP moving into Martin's company, but then the likes of Barrick looking to develop in Reko Diq in Pakistan. Newmont, obviously, a big reason for their acquisition. And Newcrest was the copper component of that company. Are you seeing more interest in the copper space from those big corporates?
Yes and no. I think, look, as Mike's point before, it's every big company is in their interest and part of their role is their BD team needs to review every single copper company. So it'd be no surprise that all of the junior companies have probably had CAs with these majors, most of them, to be honest. And so that hasn't changed. I think where I'm seeing a real change is people now saying, well, what's the opportunity of you guys going to development? So that's the thing now people are looking at, and you're getting a lot of discussions with smelters and offtake providers and mining companies. So what's your likelihood of getting into production? But look, just to point on the jurisdiction thing as well, is it's been difficult in the last 3 years, I think, with bringing the investors and the corporates along in your dream of these jurisdictions, because we've all worked internationally and we understand what it's like to work in different places, and quite happy to go there and kick the rocks and know what to do there. But bringing that investor base along and believing in that you can do that, that's been the challenge, particularly with the ASX. And so that's something, like Martin was saying, is still lagging a bit. But certainly in terms of the people who understand copper, how to get it from one place to the other, making the deals, there's a lot of interest in that side of things.
Do you think, and I'm not picking on you, Brendan, you weren't at the company yet, do you think a discovery like this, De Grusser, so high grade, so profitable in Western Australia, has sort of set the rest of the junior copper space back in that regard, in that, there's not many assets that sort of meet the comparison, which is something that Sandfire struggled, I think, with for a long time, to find something that they could show the local market was comparable. Brendan, do you want to take that first?
Yeah. Oh, look, happy to. The thing I regularly reflect upon, if you look at Sandfire over the last 2 years since I've been there, it's a function of all of the hard work people did before I got there. There were some challenges that we needed to work through, but the platform that was in place, clearly the Matza transaction had its early, questions that were posed. Primarily, I often say that the spreadsheet that the transaction was premised upon didn't have a Vladimir Putin cell. If it had been turned on for Russia crosses the border into Ukraine and European power prices go over 300 euros a megawatt hour, you might have put a different number on the table. But the company had to work through those issues, and we've talked about a lot of things like new technology and different ways of thinking, but I go back to the fact that in mining, ultimately, the most important thing we need to do is the basics well. And actually, if you look at an asset like Matsa, I think what the team has done is very much focus on those basics. And now we have a business that's being seen to be more predictable, more reliable. It's mining, it's never going to be straightforward. Mateo, again, bought into the portfolio. We built Mateo for $400 million of debt and equity. In the last 6 months, just over 12 months old, it made $160 million of EBITDA. That project was bought in on time, on budget, ramp up to schedule, and then running above nameplate, literally within 12 to 18 months. And so again, I think that gets back to being very good at the basics. So there's no doubt that I think having an asset as good as DeGrussa probably led to the belief there has to be more. I won't use analogies, they're probably not appropriate in this room, but there's an addiction to something as good as that. But I think in reality, it also was no doubt the foundational enabler of everything that's come. And as we sit here today, the company is fundamentally different than it was 3 or 4 years ago. Sandfire is now a global company operating through the European and African time zone with a head office here in Perth. We're developing people, we're developing our knowledge, and we're looking to grow. The balance sheet is in fundamentally different shape. So I think, from an industry perspective, we need to be mindful. Yes, the rocks, you've got to go where the rocks are, but you also need to chase the types of rocks that suit the scale of company that you are. Like has been mentioned, we look at a lot of stuff, but ultimately we need to make sure that we don't become overly optimistic in terms of the things we can tackle. We think a lot about complexity that we could add depending on where we go. We also think about the scale of investment that we could make and what that would mean for our balance sheet. The thing, someone mentioned the crystal ball earlier. I'm a big believer. I have 2 crystal balls. I have a short-term crystal ball and a long-term crystal ball. The short-term one doesn't come out of the cupboard anymore because it doesn't work, because we always get short-term views on markets wrong because of the things we can't see. But I think as we've heard today and we're seeing play out in the copper market, those longer-term fundamentals do tend to win out at the end of the day.
Thanks, Brendan. Darren, DeGrussa was a great discovery and set a benchmark for the rest of the industry and for Sandfire itself, as Brendan said. Is that something that we're to attain to for FireFly?
Yeah, don't take this the wrong way and don't tell anyone, but I think we've got something pretty close to DeGrussa in that upper VMS zone.
Rhonda, did you get that down for the next edition of Paydirt?
We've actually got, in our high-grade VMS zone, so far it's 6 million tonnes at over 4% copper and still open and still growing. But on top of that, we've got another 45 million tonnes at nearly 2% copper in a bulk footwall zone. So we think we've got a pretty world-class system on our hands. But, like Brendan and like Mike and like those groups, we scoured the world for copper projects as well. Very hard to find copper projects of quality. And I think that'll really drive the M&A landscape moving forward, because they are hard to find.
Will there be an opportunity for more, we discussed it was the domain of the majors, really, the copper space over the last 20 years. Will there be an opportunity for more developments from juniors and mid-tiers and different size companies?
Yeah, look, I think so. I believe that's going to be the focus and the drive moving forward. And I think we'll start to see a lot more M&A activity in that space off the back of what juniors have done and the discoveries that they make.
Mike, are you looking more closely at juniors that are doing work in different systems?
Yeah, absolutely. First Quantum started as a little junior producing copper from a tailings retreatment project in Zambia, and made enough cash flow out of that to buy Kansanshi, which at that stage was being passed up by the majors as a project that they couldn't quite work out how to construct. And we bought it for, I think, something in the order of $28 million. Produces that every few days in revenue at the moment. So you can certainly kick off with small projects. A good grade copper project can produce really significant revenue in a short space of time. And I think the FireFly model is a great one. De Grossa was a fantastic deposit, and Sandfire's been able to capitalise on that to build a global company out of it, as has First Quantum over the same period. Whether you can find those in Australia is an interesting question to pose to this room, because there's not many success stories in terms of modest scale copper deposits in Australia that have really worked for juniors. And I guess Oz Minerals and Sandfire are probably two standouts in recent years. But when you think around it, there's been a number that have failed, perhaps because of prevailing market conditions at the time, or the quality of the ore body, or the complexity of the processing, and a number of other things. And so we do consider that quite regularly when we talk to a number of the juniors in Australia trying to get projects off the go. And I think there's a bit of a misunderstanding in Australia, because the copper industry is not as dominant here as gold or iron ore or some of the other, or even nickel. People sort of equate copper mines to gold mines in a way that I'm not sure is quite correct. Because if you look at today's spot prices, what you would consider to be a good gold mine in Australia, something that produces maybe 200,000 ounces a year, is actually only 55,000 tonnes of copper, based on today's spot price, considerably less when the gold price was less inflated than it is today. But so that's actually not a big copper mine. I mean, 55,000 tonnes, if it's good grade, you can make some good money out of that, but it's not what you would call a world-class copper deposit. Really, you're up around the 200,000 tonne a year copper scale, certainly for a company like ours or any of the majors. That's equivalent of like 1 million ounces a year type gold mine, and there's not too many of them around. So I think that's the sort of slight disconnect that both perhaps investors and smaller companies in Australia have about what they're looking for. And indeed, the link between that and then the capital you need to develop, to explore them and develop them. Because the porphyries typically, we have a saying in our group that porphyries are grown, not discovered. Because so many of them were discovered 30 years ago, and they just incrementally grow over time. And Graham Drew's hoping that he can disprove the rule there, and that he'll grow his very quickly. But I think it takes literally hundreds of millions of dollars to drill out a porphyry to the point where it can be developed. Whereas a smaller VMS, like De Grossa, or even a modest scale sediment hosted copper deposit can be much more quickly evaluated and put into production. So I think there is quite a significant difference there.
Great, thanks, Mike. The cheese plates are coming out, which means that I've done all my work, and it's now time for you to do some of the questioning instead. We do have a roving microphone. I think Paula's going to... Have we got any questions from the audience? Yes, we have, just down here. Please. If you could just let us know who you are and who, if anyone, you're speaking on behalf of.
Mick Wilson, Bella Vista Resources. I might share an office with Darren Cooke there, but my question is back to that concept of, we've got 5 companies up here, no one's got a project in Australia. So what do we need to do as a country, noting the whole 3D seismic concept, pre-competitive information, what do we need to do as a country to attract more investment in exploration in copper?
That's a great question. Have we got any takers? Mike, you've picked up assets in Australia, nickel asset in Australia, but not a copper asset. Is it been a discussion on the table?
But we have had several exploration projects for copper. We're quite active in South Australia, and we've certainly looked at many assets here in Western Australia. I think Australia has ultimately a really good potential for copper. In fact, we have a database of 300 basins worldwide that we consider potential for sediment-hosted copper, and 4 of them sit here in Australia. And they're actually very close to the top of the list. The difficulties here are, and just to give you an example, one of those basins is in South Australia. We wanted to go out and do grid-based geochemistry to essentially base of the cover, which in that area is about 40 metres of cover. So we wanted to get geochemical sampling at wide spaced. The air core program is going to be about $400,000. The Aboriginal clearance program is actually going to be more expensive. So it's going to be somewhere close to $1 million to go out and collect a geochemical program over part of a basin. It's prohibitive. So if I can go to Zambia and do soil sampling basically at surface, then it starts to become a better equation. So what do we need? We need the access somehow to improve, for there to be better mechanisms on the ground to be able to go and collect base data at the base of the transported cover. There's a lot of people working on that, but and then basically it comes down to geophysics, and EM is a wonderful tool. It's discovered many base metal deposits here in Australia and will continue to, and it's evolving as a tool where it's getting deeper and more effective. So that plus deep seismic transects across the major basins. I mean, nobody's going to do, no geoscience agency is going to do grids of seismic data over your favourite basin for you, unfortunately. But even a few transects of seismic across your favourite basins. We were out in the Amadeus a few years ago and we were starting to use MT there, but man, we would have loved to have had some good seismic sections. So those would be my picks.
Yeah.
Brendan, it goes back to your point, I think, doesn't it, earlier about jurisdictional risk and the perceived risk?
Yeah, look, I mean, as much as we can have philosophical discussion and debate, at the end of the day, our owners expect us to invest where the risk reward is the most attractive. And so, as a company right now, we've got what we would say are the two most modern processing hubs in the Iberian Pyrite Belt and the Kalahari Copper Belt. And we think they're going to become increasingly interesting to the world, that we're all, I think, expecting to play out in the copper space at least. So we're always theoretically going to get a greater return if we invest our incremental exploration dollars there, and we are rapidly accelerating our efforts there. But in saying that, we make no bones about it to our owners. We're spending $30 to $40 million per annum here in Australia on our corporate office with all of the overhead, managing some of the obligations that one has. You can imagine, therefore, there's an immediate synergy if we can find an Australian asset that can generate revenue in this country. So we would love to do so. I grew up exploring in this country, so there's no doubt that there's a motivation. But of course, any discovery is going to have, a lot of things we'll have to work through in terms of timing to first production, the amount of cost to first production, then ultimately all of the things that feed through into your ongoing operating costs as you're producing, which is somewhat of a handbrake. I said to investors recently, when you're in a point in the cycle where assets were expensive back in the late 90s or 2000s, you might look to the drill bit and say, well, we'll try and solve strategy through exploration. I would argue today you can't in certain jurisdictions. You can't, because it's all well and good to say we can have a major discovery, but if first production is 17 to 20 years away, most of our shareholders won't be on the register. So that to me is a real dilemma in certain jurisdictions. So I think we need to find a solution for productivity, and there's a few ways we can do that, probably beyond the scope of this forum, and we need to get certainty around approvals timelines, and policy is a big part of that, and a particularly important part of that is the policy that does exist. We've got to rely on that being, if you like, the framework that defines the swimming lanes, because it's not always the case today. So that would be my assessment. So there's no aversion to Australia. In fact, we'd love to be here. But finding the right opportunity, one, is difficult, and two, at the moment, the timelines to first production would be fairly unappealing.
Great. Darren, did you?
Yeah, I was just going to say one of the other things that really would supercharge exploration in Australia is reforms to taxation and government incentives. One of the observations I make in Canada is they have a scheme called flow-through which basically means that you can pass on the tax benefits to individual investors, which means you bring more money into the industry, and it has supercharged exploration in Canada. So one of the things to bring back the drill rigs into Australia, bring back the investment money, is to look at incentivising through taxation, which Canada's done very successfully.
And unfortunately, overnight, the budget has missed out on a JMEI again. We've got a question here from Liam.
Thank you. Liam Twigger from Argonaut, but I'm speaking from a personal perspective. Just looking at funding for the sector, if you look globally, there's been a 50% drop on the number of companies listed in London on the London Stock Exchange over the last 20 years, a massive drop in the Canadian listed companies, and there's a conga line to the ASX as these companies come to the last bastion of capital for the mining sector. But a lot of the funds investing in the mining sector here are looking, they're either index huggers or ETFs, looking at the ASX 300 or ASX 200. So if you sit outside of those, it's really tough, and you can see that with the lack of IPOs that we've had in the last 12 months. So unless you've got an inspirational, like a promoter or a very successful promoter, to try and raise money at the moment, it is hard, but I think we've got a sophisticated market that can give you your first 5 or 10 or 15 mil. But I think the light at the end of the tunnel, we saw that Mitsui come in and put a couple of $1 billion into Rhodes Ridge. And these strategic players that don't want to take over your company, but are looking at maybe taking 20% of your project, I think they are going to be really dominate going forward. There are 20 or 30 of these strategics in sort of Asia, and I guess you could include the Glencores and the Trafigura's as well. But I think that could be a very viable model for juniors if you can get yourself up to where you've got a resource, maybe seeking a partner who'll come in and pay a premium and get you up, rather than, you know, the BHPs and the majors are good and fantastic if you've got them on side, but generally their interests aren't necessarily aligned with your shareholders' interests. And I think you'd be better off taking it further yourself and looking now at the likes of Mitsui's. And there's some players in the room here that I've seen today that are strategics that will take a 10 or 20% stake at a good premium. And I think that might be a viable source that we're going to see more of in the future.
Thanks, Liam. Martin, this must have been a debate that occurred with inside the boardroom at Cobre.
Yeah. Yeah, totally agree with what you said. So, but there's only so much you can do. So there's only so many strategies and angles you can take when it comes to that sort of point. I think the rationale that we went ahead and partnered with BHP at a project level rather than at a company level is mainly focused around the dilution of the actual structure and the amount of money that has to go into the project. Shareholders would just be diluted quite heavily if that was to happen. So having a joint venture, a possibility, and it's been done very fairly as well, this joint venture or this earn-in. The reason it's done fairly is that they're spending all the money, we're operating it, and they're paying us a decent operation fee to manage the project moving forward, which saves further dilution from existing shareholders at that point of view from a corporate overhead perspective. On top of that, if BHP find a tier 1 discovery, that's when it goes into a 75-25% JV. They will then use their balance sheet to loan and fund us in our development of that 25%. So they're actually working and collaborate with you. And in addition to that, if they don't find a tier 1 and they find like a tier 3 deposit, like 1 million tonnes of contained copper, that's a fantastic result for a junior company, but it might not move the needle for a BHP. Then we would retain 100% of the asset after they've spent the 40 million, and they get a couple of percent royalty that we have an option to buy back 1% of that. So I think that sort of transaction is very fair, and it's a win-win for both sides. And it is a collaborative way of doing it. I think ideally, if you end up getting those cornerstones you talk about to take a 10 to 20% stake, there's other issues around that as well, in regards to voting rights and et cetera, what can happen with the company moving forward and sort of strategic positionings inside the company, which carries its own risk. But I have had those sort of partners before in previous companies I've been involved in, and it's been a success doing that too. So, yeah, hope that answers it.
Thanks, Martin. Well, unfortunately, we've got a desperate question right over here, Paolo. Our last one. We've got the microphone.
Yes, thank you very much. Brendan Augustine, Independent Government Relations Advisor. I think you threw down a challenge across the panel around the market having to take a greater appetite for political risk. We're seeing, I guess, a lot of opportunities in high-risk country, higher risk than, I guess, people on the panel, countries where they are in at the moment, countries like the DRC and Angola, which is about to start its first copper project, Shining Star, I think next year. How would you approach that higher end risk? Does the bandwidth cover that? What's the appetite for that? And across the panel, be interested in your views.
Thanks, Brendan. Brendan, did you want to take that one first?
Look, I'll have a go. Personal view is I think we're the wrong people to be answering that question, primarily. Because to move significantly up the risk appetite curve, you've also got to contemplate whether you're betting the company. So I'll use Argentina as a good example. What I think is being done there very well is people are moving into Argentina because they're seeing green shoots geopolitically, seeing what looks to be a supportive operating environment, and we know the rocks are there, that they're actually looking at almost the petroleum model, again, of unitising resource or reserve or joint ventures and so on. So you actually trade away the risk through your partnership model. And I think that makes a whole lot of sense. And I think, therefore, primarily, that is a real question for the major miners, the large Western miners, because let's take nickel, for example. So the nickel industry has been fundamentally transformed in the last decade. I'll ask you who's been the winner and who's been the loser. If you look at copper, you mentioned Kamoa, the DRC. It's fair to say that there's been limited investment in building significant options in the copper space. Most people now need to put enormous amounts of sustaining capital in just to stand still. The production has come from non-traditional parties. So I think it's all well and good to say that, or question whether we can operate as an industry in certain locations. I think the question that needs to increasingly be asked is what's the risk of not going there? Because I think that's probably the question that wasn't posed 20 years ago. And I think the consequence of that is other major players have cut the lunch of the traditional industry. But again, personal view that I think just by virtue of taking significant risks, you need to look at it through a portfolio effect. Smaller companies are less likely to be able to do so. I think the larger companies are going to need to think about how they more and more take that lead. And I think we are, as I said, seeing green shoots in that area, but just a personal view.
Great. Thanks, Brendan. And thanks, Brendan. Unfortunately, we're running out of time. I've just got time to ask one of my emergency questions that I need to get off my chest, and I'm going to ask each of our panellists. I'm going to start with you, Daniel. What will the copper price be, let's say LME, on the 26th of March, 2026? 2026?
Yeah. Well, thankfully we're an independent market research company, so we're very can provide that pretty clear. I think it's probably best I step away from this question. I'll pass it over to the...
What you're saying is we need to pay at least $10,000 subscription to come and get a price off you.
That's it. That's what I'm saying. No, cheap pop there, mate. Yeah, absolutely.
Martin,
it's behind our paywall. If you want to know.
Martin, come on, be braver than Daniel is.
Sure. I think you're going to see a short-term spike in the copper price that we're seeing now due to the tariffs that's happening. So you'll see some big gap occurring at the moment, as we talked about earlier. So you probably see a spike, you probably see a pullback during the year. So I'll probably guess 10,500.
10,500. Rhonda, make sure you're writing this down for publication. Dave?
He stole my thunder. I was going to say 10.5, but I'll say 10,250.
Ex-nickel man always just goes a little bit negative. Darren?
I want to know what the price is for putting it on the block, you know. Like, what are you going to give us if we get it right? But no, I think it's going to be about 10.3.
Right. Mike?
I'm going to say it doesn't matter.
Yeah.
It doesn't matter what it is this time next year. What matters is what it is over the next 10 years as an average. Because if you're building a mine, it really doesn't matter whether it's $8,000 a tonne or $12,000 a tonne. What you need is a sustained copper price over a long period, and that's what's going to drive people to build more copper mines. So, but ultimately, if you ask me what it's going to be in 10 years' time as an average, it's going to be $15,000 a tonne. Has to be, because otherwise nobody's going to build any more mines and we're going to run out of copper.
Thank you, Mike. Brendan?
So what's the price today? $4.50 a pound? What's that in tonnes?
Yeah, tonnes, it was 9970 or something like that.
It won't be that.
Now, is this out of your...
It will take $1.
Is this out of your short-term crystal ball or your longer-term
Well,
looking back?
It's got lots of dust on it. I haven't found it. It's been packed somewhere between Singapore and Australia, I think.
We can run a scenario and take it to any price you want, really.
Yeah.
Brilliant. Well, thank you very much to our panellists for joining us. Thank you to everybody who asked questions. Thank you to those who were going to ask a question, but I took all of the thunder. And thank you to everyone for joining us. As Bill said, you know, these lunches, I mean, we could have this discussion. I'm sure we could go for a few hours, but it's much better if there's people listening to our panellists as well. So thank you very much for joining us this afternoon. Please stay there. We've got the room for another 20 minutes or so, and then you can always join us downstairs for further networking. We will be back. Paydirt is back over the road at the end of April for our Critical Battery Minerals Conference, so please join us out. We've made sure that copper is significantly part of that because it's about the only commodity that's up this year in that basket. And then we will also be back in May with another Paydirt Unlocked lunch, so make sure you're on our mailing list for that. There'll be coverage of this edition of Paydirt Unlocked in the next issue of Paydirt, or not in the next issue, in the May issue of Paydirt, so please make sure you subscribe to that as well. Other than that, thank you, and please join me in thanking our panellists for a great discussion.